Hi friends, welcome to this video. In the previous video, we talked about hooks and how the market starts a rally or drop after forming two hooks. The link to that video is at the top of the screen. If you haven't watched it yet, make sure to check it out. Today's topic is about nodes, what they are and what role they play in the market. But before we continue, I'd really appreciate it if you hit the subscribe button. As I've mentioned before, my goal is to teach you algorithmic trading. So let's start by defining nodes, so there's no confusion during the video and you can fully understand them. Nodes are points or peaks numbered by codes, running in the banks, forming one after another. Sounds a bit complicated? Let's go back to the hooks from the previous video. Remember how we marked the highs? 3 highs for hook 1, and the lows as well. Each of those highs and lows is considered a node. Price reacts to them, creates a node, and then moves toward other nodes. Let me give you an example. Here's the same hook we studied earlier. Now I'll redraw it from the start. Watch carefully. This is the end of our trend. Let's assume there was a node behind it, and when that formed, a new node was being created. This is the end of our trend. Let's assume there was a node behind it, and when that formed, a new node was being created. The market pushes up. This is our first hook high, which we call node 1, marked with N. Then the market reverses and creates a new node called S1. After forming this node, the price moves toward N1. Now, before breaking it, let me explain the difference between this strategy and others. In other methods, traders see this zone as resistance. They open short positions. When price breaks through, they assume resistance has turned into support and go long on the retest. But once again, their stops get hit and they're out of the market. This is where you realize why this strategy is unique. After that, the market continues the same pattern. It dips below S1, forms S2, then pushes up, breaks N2, and forms N3. After that, it retraces again, creates S3, and holds at the 86.4% Fibonacci level. From there, it begins forming the second hook for a rally, just like the setup I showed you in the previous video. And then, the market starts rallying. Now let's go to the chart so I can show you some examples. This will help you fully understand and master it. Now, on the chart, you can see 2 yellow boxes. The lower one marks the support zone and the upper one marks the resistance. We identify the nodes within these zones. What happened at the support? As soon as the price reached it, some traders went long and placed their stops below the support. But their stops got taken out, and that's where our second node was formed. Then the price pushed back up to the resistance zone, where stops got taken out again, and our upper node 2 was formed. For node 3, the price retraced to the 86.4% Fibonacci level. This is where we enter a long trade, targeting node 2 at the top. Notice how the market didn't even come close to hitting our stop. This is the point where you can say you've nailed the entry. Taking a trade with a 1-to-6 risk-to-reward ratio. With practice and repetition, you'll be able to spot these kinds of powerful trades, enjoy your own analysis, and multiply your money. I hope you enjoyed this video. Make sure you hit the subscribe button because from now on, we're going to change your trading world and build a big family together. If you have any questions, drop them in the comments. I'll reply to each one. Wishing you all profitable trades.